Imagine pouring your entire life savings into what was once considered a rock-solid investment, China's real estate market. Now, picture watching it all vanish in slow motion. With over 60 million empty homes and housing prices dropping for 16 consecutive months, families aren't just losing assets, they're losing their future. What used to be a pillar of security has turned into the foundation of a national mortgage crisis, shaking the very belief in real estate as a safe haven. These properties weren't just homes. They were the cornerstone of life itself. Marriages depended on them. Retirements were planned around them. Social status was measured by them. But with the implosion of the property bubble, even high-end towers now stand as lifeless monuments. No one asked questions when developers like Evergrande sold grand promises on shaky foundations. Now that the house of cards has collapsed, the echo is deafening. And here's what's truly unsettling. This isn't just about buildings, it's about belief. Public trust has been fractured. Faith in the system, in stability, in financial institutions is eroding fast. When people no longer believe their homes are secure, what do they believe in? That lingering doubt is more dangerous than any collapsed condo, and it's spreading fast. If this already shifted your perspective, make sure to subscribe and turn on notifications. What's coming next will challenge everything you think you know about China's economic stability. Something extraordinary happened when homeowners reached their breaking point. They stopped paying, not because they didn't want to, but because their homes didn't exist. Across China, hundreds of thousands of buyers realized they were financing empty promises. What began as frustration quickly morphed into a mortgage boycott, spreading across more than 300 housing projects like wildfire. These weren't quiet complaints. They were full-blown acts of defiance. For the first time since the Tiananmen era, the streets echoed with coordinated protests driven not by politics, but by concrete desperation. People poured out into public squares, waving their contracts and shouting into the void. It wasn't just unfinished apartments they were fighting against. It was the betrayal of a system they once trusted blindly. The boycott exposed how deeply the property bubble had infected daily life. And just like that, private grievances became national outcries. Imagine an entire middle class betrayed, enraged, and organized. What's more, despite censorship, despite threats, people are still speaking up. And the deeper the economic collapse, the louder those voices get. Now here's the twist. The damage didn't stop at homeowners. It hit the banks like a wrecking ball. With thousands of borrowers refusing to pay and properties left unfinished, lenders had nothing to recover. Collateral disappeared into dust. Suddenly, the backbone of China's financial system began to snap under pressure. Small and mid-sized banks, already fragile, began to fall. Some banks even froze accounts, triggering panic among everyday citizens. Long lines formed outside local branches as people tried to withdraw their savings, only to find that their money had become untouchable. Over 290 small lenders were absorbed into state-run institutions in 2024 alone. An unprecedented move meant to calm nerves, but only raised more questions. Who's really safe? Behind the scenes, the true horror was unfolding. The banking sector was caught in a vice grip between toxic real estate debt and public distrust. With confidence shattered, the dominoes began to fall. And yet, this was only one part of a much larger design. A system built not to serve the people, but to prop up the illusion of growth. And now, we look deeper into how that illusion was sustained for so long. If this helped you connect the dots, you're just scratching the surface. Subscribe now and turn on notifications to keep uncovering the shocking mechanics behind China's economic unraveling. At the heart of this crisis lies a business model that reads like a financial thriller. Companies like Evergrande weren't just building homes. They were playing a dangerous game of musical chairs. They sold properties before construction, then used the down payments to buy more land instead of building what was promised. It wasn't development. It was a Ponzi scheme in disguise. This debt-fueled cycle worked as long as confidence held. But when buyers stopped believing, the whole thing unraveled. Developers became unable to finish existing projects, let alone start new ones. What remained were shells of buildings, and even hollower trust. The tragedy? Local governments often turn a blind eye because they, too, were feeding off this bubble. This unholy alliance between state and developer created an illusion of infinite growth. But you can't build a stable economy on empty promises and mounting debt. The property bubble, propped up by lies and momentum, finally gave way. And now, as the pieces fall, it's not just companies collapsing. It's the architecture of a nation's economic future. But there's something even more fragile behind it all. Let this sink in. Over 70% of household wealth in China is tied to real estate. That's not just exposure, it's dependence. And now that the foundation is shaking, there's no cushion to soften the fall. No significant stock investments. No diversified savings. Just collapsing concrete and unpaid mortgages. This isn't just an economic collapse. It's a national identity crisis. What makes this more dangerous is the timing. Youth unemployment is at record highs, industrial profits are nosediving, and the elderly population is ballooning. There's no backup system in place, no financial plan B. For most families, their home was their retirement plan. Now, that safety net has disintegrated, and the free fall has begun. The government's silence is deafening. Instead of structural reform, we see short-term patches, local bailouts, and veiled panic. The cracks are everywhere. And as China's economy teeters, it's not just about wealth. It's about dignity, future, and faith. And soon, even the most faithful are beginning to question the very system they were taught to trust. The Chinese Communist Party has long maintained power by promising prosperity in exchange for obedience. But what happens when prosperity turns to dust? We're starting to see the answer. Despite censorship, surveillance, and fear, protests persist. People are taking risks that would have been unthinkable just a few years ago. This isn't just about unfinished apartments anymore. It's about a broken social contract. Citizens are losing faith in both banks and the regime that backs them. And the cracks aren't being patched, they're being ignored. The CCP, once seen as invincible, now seems reactive, out of touch, and increasingly desperate. That desperation is visible in the quiet rollouts of bailouts and financial restructuring. The very tools that once upheld order, fear, control, loyalty, are starting to weaken. With each protest, each viral video, and each frozen account, the people gain leverage. This is a slow, silent erosion of control. And as it continues, China is forced to reckon with something the regime can't suppress with firewalls or fear. But this isn't just a domestic crisis anymore. The Chinese Communist Party has long maintained power by promising prosperity in exchange for obedience. But what happens when prosperity turns to dust? We're starting to see the answer. Despite censorship, surveillance, and fear, protests persist. People are taking risks that would have been unthinkable just a few years ago. This isn't just about unfinished apartments anymore. It's about a broken social contract. Citizens are losing faith in both banks and the regime that backs them. And the cracks aren't being patched, they're being ignored. The CCP, once seen as invincible, now seems reactive, out of touch, and increasingly desperate. That desperation is visible in the quiet rollouts of bailouts and financial restructuring. The very tools that once upheld order, fear, control, loyalty, are starting to weaken. With each protest, each viral video, and each frozen account, the people gain leverage. This is a slow, silent erosion of control. And as it continues, China is forced to reckon with something the regime can't suppress with firewalls or fear. But this isn't just a domestic crisis anymore. The numbers alone are staggering. $13 trillion in stalled housing projects. $5.3 trillion in developer debt. This isn't just another real estate meltdown. It's a seismic event, one that dwarfs the 2008 mortgage crisis in scale. Credit agencies like Fitch Ratings have already downgraded China's debt outlook, and global investors are bracing for aftershocks. Supply chains are being disrupted. Commodity prices are shifting. Global markets are on edge. When the second largest economy on the planet begins to crack, no one is left untouched. And unlike past crises, this one's root is structural. It can't be fixed with a quick bailout or a PR campaign. It's deep, it's slow, and it's spreading. Now the question becomes, how much longer can this be contained? The CCP faces limits, economically, socially, and politically. The house may still be standing, but the foundation is eroding fast. And once it gives, the global economy may be forced to reckon with a reality it's tried to ignore for too long.